All right, my friends, thank you for joining me for 3 at 3 with Dr. J. That's me. We're going to give you a look into our world, some of the unusual activities that we're seeing because it's important when the markets are going up and down like this to keep an eye on where the biggest money in the market is being committed. We believe that that is through block trades of stock options or futures. I'll show you a little bit about that right now. Let's hit it. All right. First, the disclaimer. You guys are used to this, but educational and informational purpose, that is why we're doing this, to inform you, perhaps even to entertain you. But obviously, before you commit your capital to any trade, make sure you understand the risks. Always good advice, and especially right now, good advice. All right. So let's dive in, shall we? What about this one? INO. Wow. Pretty big purchase of not this week, but next week out, the 27th expiry of March, which would, nearly be that, the end of the quarter too, right? Well, INO. They're buying the March 7 calls. So those are at the money. You guys understand how this works. Out of the money, in this example, with the stock trading $7.17, that would be 7.5 strike, 8 strike, 9 strike, 10. That would be out of the money as far as calls go. As far as calls also, every one of these options is for 100 shares of stock. So when I'm talking about 4,000 options being purchased, I'm talking about nearly 500,000 shares. 400,000 share equivalent is what we're talking about here. They were bought for basically $1, all the way up to $1.50. As you see, 95 cents to $1.50. The open interest was only 472, so we know that this was opening new trades. Now, as far as that dollar, again, you'd move the decimal point. You'd say, well, every option is actually $100. So if they bought 4,000 of these, it's a fairly significant investment. And instead of buying the stock, which would have cost them $7.17, or let's do it on 1,000 shares, $7,170. Instead, for $1,000, instead of 7,000, this is only 1/7 that amount that they're putting on the table. And they have till next week. They're 17 cents in the money, even though, like I say, they're at the money. They are 17 cents in the money. Somebody's betting that this one that's had a lot of ups and downs, pardon me, there's an example of exactly how much ups and downs it has had. You see it on March 2nd. That's when the stock was, give or take, let's say $5. Then we see it explode up to around $15, pull all the way back down to $6, and bounce around along that line for the last week. Now making nearly a 12% jump. So Inovio Pharmaceutical, that is one of our unusual activities today. I do own this one. All right, I own the calls, not the stock. Second, for unusual activity, or UOA, is EFA, EFA. What is that? Well, that's the MSCI index, basically of large caps and mid cap stocks that are inclusive of virtually the whole world except for the United States and Canada. Except for the United States and Canada, EFA represents that broad swath of large cap and mid cap stocks. So looking around here, we see that they're buying puts. Which puts? May. So again, the information contained in an options trade like this, and this is why we over at Market Rebellion love this, because somebody trades stock, all you know is if they bought it or sold it in most cases, not in all, but in most cases. But you don't know time frame, you don't know targets or anything else. In this one, we've got a put option being purchased about $3 under, $3 out of the money, because of course a put is the right to sell the stock. So somebody has purchased the right to sell a stock that is trading at 49, and they've purchased the right to sell it at 46. So to us, that is either somebody that already owns stock and is worried, or somebody that's betting that the index continues to go south. Got a graph to show you where this one's been and where it is right now in a second. So they paid $2.27, and they are out into the future by nearly 2 full months, because right now, of course, we're at March expiration, quadruple which March expiration, in fact. So now we've got somebody putting on not April, which would be 1 month out, but May, which is 2 months out. So that's time frame. How long do they want to be in a bearish trade for this index? 2 months. What strike? They basically are buying $3 out of the money, not at the money like our previous example, or even just a little bit in, out of the money. So they paid $2.27. That means, since every option's for 100 shares of stock, that's $227 per option contract. So looking at this one, this is somebody, by the way, who has been right before. You've heard me say on CNBC perhaps many times, or in our webinars, that one of my favorite trades is to follow somebody who's been right. And I bet you know why. Because if they've been right, I like following that activity and seeing, hey, this guy's got a hot hand. This gal's got a hot hand. I wanna bet with them. All right, that's what we're doing here. Because as you can see, they already cashed out of their May 50 puts. Now they're rolling down to those 46 puts. So let's take a look at the graph. There you see that we came down beginning of March. Let's say the stock was, give or take, 63 bucks. Now it's $47. Does this level hold? Well, as you can see, it's been trying to break through here for the last couple days. Maybe today's the day that it does. Or maybe it's next week, or 2 weeks from now, or a month from now. Remember, they have 2 months to be right in this trade. So this is an out-of-the-money put trade in EFA. Again, large cap, mid cap stocks that are mainly focused on everything outside of America and Canada. Last one, take a look at SLV. Many of you have heard us say, and people in various media say, that they've been forced to sell. Many of these large holders of silver and gold have been forced to sell, because when you're getting a margin call, you're going to sell what you have to and what you can. And in this case, we think that creates an opportunity. So SLV, look at this, 15,000 options. So since every option is for 100 shares of stock, this would be 1.5 million share equivalent of this stock. Now the ETF for silver is trading just under $12. What were they buying? A call up at $13 in January. So again, what's that time frame? 9 months into the future. So this is not a short-term trade. It's somebody that wants a trade on for a longer period of time. If you thought something was going to move like this, bang, 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 you would be in there, this trader would be in there trading in the shorter term, in the April or even the May contracts, as we've seen already. Now, this trader is all the way out there to January. So, time frame, 9 months into the future. Strike price, over $1 above where the stock is trading or where the ETF is trading. Paying $2, which means $200 per contract, 15,000 times. 200 times 15,000. That's why we're paying attention to this. Here's where silver has come from. As you see, north of 16 just a little bit ago. Maybe all this selling you see on the graph back here, maybe all that selling that carried it down to 11 bucks, maybe that was people that had to raise cash because they were getting margin calls. Whatever the story, this one sold off. We are taking advantage of it, jumping in here, owning these calls. And in full disclosure, I do own these calls, but I own shorter dated calls because you know what? 9 months, I've got guys in our wealth management firm that'll manage my money out 9 months from now. I'm more into the short term. So I'm trading the shorter dated calls, but I am in calls in this one and Inovio Pharmaceutical. The EFA I am not in yet, haven't gotten hit on my spreads yet, but when I do, I'll let you know. I am John Najarian. You know what? You should check out Market Rebellion because we put up unusual block activity like this throughout the day, and we have just started putting it out to you guys on Twitter, on Periscope, on, let's see, where are we? Facebook, LinkedIn, we're virtually everywhere with this. So if you want to get this when it happens, so you can be on these trades as they happen, well, you got to check out marketrebellion.com /go, and you can see about all of our offerings. By the way, another free streaming webinar after the bell tonight. That's going to be with Andy McOrmond, somebody who makes markets for really big traders. I mean, elephants. And Andy's going to be on with us talking about what those elephants have been doing, where are those elephants trading, and exactly what sort of the mindset right now of some of the biggest money managers on the street. Wallach Beth is a broker for those big folks, and we'll be talking with Andy in about an hour from right now. So I hope you join us, and I hope you have a great day. Thank you, folks. Remember, flatten the curve. That's always important advice. Flatten that curve.